Hi, welcome to the video, and today I'm going to go over my full trading day from the moment I woke up till now about 2 p.m. The day is not over, but I've already made all the trades I wanted, and my strategy I think is one of the best laziest strategies that you can use and learn to still make money without too much risk and also being able to sleep at night. I thought this would just be helpful for a lot of you to see my train of thought through the whole day. I'll show you how I chose what stocks to sell premiums on and also what my plan is to close it out. I actually sold about $3,500 worth of puts today, which is definitely higher than average normal amount of action, but it's not uncommon for me to do this maybe once a week. But yes, let's dive in. Here we can see these are all of my current open positions right now. Some of these are hedges. They're not all to make money, but I'm just going to go over the trades I made today, January 21st. Here on the order status, you can see a majority of them I actually sold on a company called Riot. But before we dive into Riot, I'm going to show you my Robinhood where I have my watch list and how I choose which stocks that I'm going to make some plays on. So the key part of my strategy is that everything on my watch list are stocks I like and I'm okay to own. When you sell a put, one of the quote unquote worst case scenarios is if the price drops very low, way past your strike price, and that means you will be forced to buy that stock at your strike price. That is, again, quote unquote, the worst case scenario. And this will bite you in the butt if you are playing on stocks that you don't want. But if you are only selling puts on stocks that you believe in long term, the worst case scenario is that you overpay for a company you would have wanted to invest in anyways. So in this way, I'm able to sleep more soundly. Now, a lot of professional traders that have more time that want to maximize their profits, this actually isn't necessarily the best way because you can make a lot of money selling premiums, playing earnings, selecting the right company depending on the day. But for me, I have other businesses. I have a lot of other stuff to do. So it's easier for me to just focus on a few companies. It's better for my blood pressure. And I just don't need to do as much research because I don't have time. So here I have a list and I also own some of the stocks so I can track it. This is in my Robinhood. And what I look at first is what's in the red. Whatever's in the red, I could potentially sell a put on because if it's in the red, that means I could sell a put for a strike price that's much lower. And there's a higher chance that the stock price is going to stay neutral or bump up and I would get to keep the whole premium. Remember, as long as the stock stays above your strike price by expiration date, you get to keep the full premium. So we want days where the bigger the dip, the better. So here, when I woke up, I saw, a couple of these stocks are in the red. They look pretty good. So at first I might look at NVIDIA and it's down 5%. And I was thinking, oh, maybe it's time to sell a put, but I clicked into it and then I looked at its monthly and yearly chart and it's still close to its record high. So even though today is a red day, if you look at its overall trend, it's still pretty high. So there's a good chance that if I sold a put today, tomorrow it could dip a lot and it would go past my strike price and I wouldn't be profitable anymore. So I just continued looking. There's no point in rushing into any position. And that's when I saw what was happening to Riot. Riot is a blockchain company. It's tied to Bitcoin. It's a company that basically helps mine Bitcoin. And today Bitcoin was down big, very, very big. And when Bitcoin's down, Riot's down. And Riot is a company I'm very bullish on. I'm bullish on Bitcoin short term and Riot's tied to that. And look at this 3-month or 1-year chart. This is a big dip from its high, from $28 to $19. This is over a 30% drop. Not over, just about nearly a 30% drop from its high. It's possible it could still fall, but this is a big enough dip that I want to consider looking into selling puts on. And remember, everything on my watch list has already high IV, and high IV means fat premiums. So if you look at these premiums, selling a put, I usually do puts about a month to 45 days out. So I was looking at the February 26th ones. And first I'll go to about 30 delta. That's the sweet spot. 30 delta is the spot where you get a pretty juicy premium, actually a very juicy premium. And there's also a 30% chance it could hit your strike price and you might be forced to buy it. But at 30%, you get just the right balance of getting paid for your risk, but also being able to eventually purchase this at a cheap price. So if it does hit $17, I still get to keep the full premium, and then my break-even point would be $14, meaning this $20 stock I would be able to own for $14, which is so cheap, which is 30% discounted today when it was already 30% discounted from its high. So this is my worst case scenario. And it's not that bad because I wanted to own more of this anyways. And if it doesn't, if it stays above $17, which I think it's very likely to do, I would get to keep $300 by February 26th. But actually, this is not what I bought. At the time I sold it in the morning, all of these values were different. I look between the 20 deltas and 30 deltas. And for this stock, I mean, look at the IV. It's so high. This amount of premium for the amount of collateral you need, it's crazy. It's crazy high. So what I did then, after I decided, hey, I think this is worth selling some puts on, is I looked into the daily, and then I did some very basic technical analysis, and I saw that, okay, there's some support right here, and there's no guarantee that it couldn't have just rocketed back down, but things were in my favor, so I sold pretty close to the low, and you could see here what I sold it at. One thing I like to do is not put all of my eggs in one strike price, so I sold 2 at $16.50, I sold 2 more at $16, and I sold 2 more at $15.50. And you can see all of the relative premiums right here. In total, on average, they're about, let's say, $250 each. So just on Riot, I sold $250, I sold 6 contracts. So what is that? $1,500, right? $1,500 in premium. In my strategy, I never wait till expiration date, though. I think there's a lot of risk. I'm going to wait till it hits 50% profit, and then I'll buy it back. So I sold $1,500 of puts today. I'm going to buy it back when the total value is about $750. And hopefully that will happen sooner rather than later. And then I would get the collateral back and then I could make more plays. Yeah, and that's basically it for Riot. The other put I sold today was on Tesla. I recently closed a majority of my puts, and Tesla is my main moneymaker. So I always like to have one Tesla put position open if possible. Usually I'll have a couple at least. Today was a fairly neutral day for Tesla, but because I am very bullish on Tesla, I don't mind selling a put when the conditions aren't quite as favorable. I chose the 710 strike price because I saw some support there. And also, I don't think Tesla is going to fall to this level anytime soon. And also the premium was right. So the premium for Tesla is still very high. IV is quite high. It's $2,300 that I get in my account today. But again, I'm not going to let it expire. I'm going to take profit at 50%, meaning I'm going to buy this back for about $1,150. One key thing though, because I am selling Tesla on not the most optimal day to be selling puts, is I would not sell more than one. So I'm going to wait for tomorrow or the day after and see what the market conditions are. I learned early on that when you sell or buy or do anything a lot in one day, you're just raising up your risk. So tomorrow Tesla could drop $50 maybe. Because I didn't sell a bunch of puts today, at least tomorrow, if it were to drop, I could sell some more tomorrow. And if it happens to go up, then maybe I might sell a call or something. And that's just to kind of hedge out your risk. This game isn't about going all in, especially if you're theta ganging or trying to get premiums. It's about controlling your position sizes and making good, consistent income and being able to sleep at night. This is very important. I used to think I would be above that, but when you are in positions that make you uncomfortable, it's hard to stay logical. It's a lot harder than you think. And even if you think you're logical, something under the surface is going to be affecting your decision making because you're going to be scared. You're going to be scared if, you know, your full account is on margin. Even though you're 80, 90, 99% sure you made the right call. If everything is on the line, your finger is going to get itchy and it might just twitch and you might make the wrong decision out of fear. But yeah, that's basically it. Let me know if you have any questions or tell me about your put selling strategy. I'd love to know what you guys do. Please remember, I'm not an expert. This strategy is just what's working for me. It's based on my own risk tolerance. It's not going to work for everybody. It's not going to be the best strategy for everybody. This is Green Knight Trading, where Squires become Knights. Thank you all so much for watching. I appreciate you, and I'll see you soon.